Hello and welcome to this session in which we will discuss the concept of capitalizing versus expensing. This is an extremely important concept when it comes to financial accounting as well as taxation. What is the overall idea here? Every time a company spends money, we have to determine whether we need to capitalize this cost or expense this cost. Capitalize means treat the cost as an asset. Add it to your asset. Add it to your balance sheet. Don't take a deduction now. Expense means expense. Take a deduction. Take a deduction now. It means reduce your taxable income. Now, this concept is covered in taxes, we're dealing with taxes, but also it's covered in financial accounting, which under GAAP we have to determine whether the item should be expensed or capitalized. Now, in the real world, this is not a clear-cut area. There are many expenditure where it could be either an expense or capitalized. For financial accounting, we always say, if you have any doubt, expense it. For example, for GAAP, we say, if you have any doubt, go ahead and expense it. For tax purposes, if you have any doubts, don't expense it, capitalize it. Because the IRS don't like that you expense it. If you have any doubts, capitalize it. But this is what we have to learn in this session. We're going to start with a simple example, then we'll learn about certain expenditure. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Starting with the general rule. What's the general rule? If you buy a tangible or a non-tangible asset with a useful life for more than a year, you must capitalize it because it fits the definition of an asset. Asset means capitalized. A simple example would be a company purchasing a new machine for its manufacturing plant. The machine cost $50,000. It would last us 10 years. What do we do with this expenditure? We happily capitalize it and move on with our life. And it's an asset. And what are we going to do with this? We will depreciate it later. This is a capital expenditure because it's a tangible asset that goes beyond 1 year. Then we have something called repair and maintenance versus improvement. So here we purchase the asset, we have the asset, we're working with the asset. Now we're going to be incurring money on this asset. Repair, maintenance, improvements. So every time we spend money, we have to determine whether this is a repair or maintenance or is it an improvement. Why? If it's a repair and maintenance, we're going to see we are going to expense. If it's an improvement, we are going to be capitalized, treating that expenditure as an asset. So what is a repair and maintenance? Just as it suggests, repair and maintenance, it's keeping the asset in a working condition. I'll give you an example. Let's assume this red light here broke. Well, we need to replace it. This red light, if we replace it, it's not going to extend the useful life of the machine. We need it in order for the machine to function properly. Well, guess what? This is a repair maintenance. Such costs are expensed. However, if we incur a cost, and that cost, that money we spend, it's going to lead to the betterment of the asset, makes the asset better, extend its useful life, restore value or use, or adapt the property for a new or different use, basically changing the purpose of this asset. Those costs must be capitalized. You cannot expense them because they're going to serve future periods, therefore capitalize them. For example, a company spends $500 to repair a broken part in this machine. Well, guess what? This $500 is expensed because it did not extend the life of the machine. It simply kept the machine in an operational condition, which is good. You want to do that, but you cannot. You can expense those costs. However, the same company decided to upgrade the software of a machine. So what they did is they changed the CPU or they upgraded the software in this robot. And as a result, it enhances its functionality, enhances its efficiency. This upgrade, let's assume it costs $10,000. And extend the machine's utility. Now the machine can do more work. It's smarter. It can deliver more units. Well, this is an improvement. And what do we do with the improvement? We capitalize them. Other expenses that people might incur, businesses, material and supplies, anything that less than 200 and it's going to be for less than a year, we expense those. For example, a graphic designer buys supplies, papers, pens, and they're less than 200. What do? We can expense them immediately. Now, to make our life a little bit more easier, the IRS created those de minimis Safe Harbor Rule. And those provisions allow businesses to expense low-cost personal items like laptop, cell phone, tablet for tax purposes immediately based on their financial accounting policies. If a taxpayer has an applicable financial statement, IFS typically means they have their financial statement audited, they can deduct up to $5,000 for each item. Just make it easier. A company that don't have those AFS applicable financial statement, they don't get an audit, well, they are limited to $2,500. If you spend more than that, that's fine. You will capitalize that expenditure and eventually you will take it in form of depreciation, which is a cost recovery. You will expense it later. So why do the IRS gives you these guidelines? Frankly, to make our life easier. Because in the real world, many items, we don't know what to do. Should we expense it? Should we capitalize it? So these guidelines helps determine whether a cost should be capitalized or expensed, impacting the financial statement reporting as well as the tax computation. For example, a company with an audited financial statement, they can buy laptops up to 4,000 computers, up to 4,500 for each employee, and guess what? Go ahead and expense it. A company with no AFS, what can they do? They can, for example, buy laptops, 2,000 each for their employees, and also expense it. Just make our life easier rather than keeping it on, keeping it in the asset software, depreciating it, and it's going to give us an immediate deduction. That's really what we care about. We don't care about keeping it in the software. The software will compute the depreciation for us in the fixed asset schedule. What we want the deduction. So we want to reduce our taxable income. So we have more immediate benefit from that deduction now. And the other reason the government wants you to do that, because they want you to encourage you to buy personal items, personal property, use it for business so you can keep the economy running. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, additional lectures, additional resources, whether you are a CPA exam candidate or an accounting student or an enrolled agent. Invest in yourself. The CPA exam is worth it. Your career is worth it. Good luck, study hard, and of course, stay safe.